With the price of Tesla stock continuing to fall, the question of whether we can still retire from it is now the most pressing concern on everyone's mind. As if everything is in chaos, doubts begin to surface. Can we trust Tesla to make things better? If so, at these incredibly low prices, how many shares do we need? The bright side is that we can buy more shares at a reduced price, which will increase our worth over time. Now let's explore these uncertainties and make use of the most recent chart. If you already agree, hit the like button and grab a piece of popcorn. If not, now is the perfect time to subscribe. Let's find out what it takes to have a comfortable and hands-off retirement by 2030. It appears impossible to stop the Tesla stock's seemingly endless decline. But hey, let's pause in the middle of the confusion to enjoy these cheap pricing. Many of us are in it for the long run, aiming for that sweet retirement in 2030, even with the short-term volatility. We need a passive monthly income of $6,000 or $72,000 yearly to be extremely comfortably retired by 2030. An annual inflation rate of 5% is factored into this computation for the years 2022 through 2030. Although there are others who would contend that the inflation rate could be lower, let's proceed cautiously and use this figure. We would need a 7% return on $1 million investment in order to make this income. What will yield a 7% return by 2030 is the key question. We don't know how much money Tesla will make in the future, therefore some people might think about holding onto and profiting from it. Conversely, during the last century, the S&P 500 has typically returned an average of about 10.5% annually. But since it's impossible to forecast market movements exactly, let's assume a 7% return to be safe. I understand that selling Tesla might not be your first option, given the possibility of greater gains, but we must take the available evidence into account. Although Tesla has been in business for a remarkable 15 to 17 years, we can place greater trust in the S&P 500's 100-year track record when it comes to long-term dependability. Thus, these are the qualifications you'll need in order to retire comfortably by 2030. Recall that you should be able to live off of this strategy for at least 40 to 45 years. That will be quite the trek. Let's now investigate the various scenarios. High-tech bear case. 10 million cars sold by 2030, with a conservative estimate of a $40,000 average selling price. $400 billion in vehicle sales with an operating margin of 20% that generates $80 billion in profits. Energy sales of around $28 billion, with over $5.5 billion in profits, assuming a 20% compound annual growth rate starting in 2022 and an operating margin of 20%. Services made up a large portion of the revenue, with an operating margin of 20% and approximately $8 billion in profits. A total of $466 billion was made. Revenue, $93 billion. Outstanding shares, 3.25 billion, which indicates the success of the share buyback. $718 per share is the stock price. $2.3 trillion is the market capitalization. Significant case, 15 million cars were sold with a $35,000 average price. $60 billion in energy sales is anticipated, assuming a 25% compound annual growth rate. Services are expected to provide around $8 billion in profits at a 20% operating margin. A total of $600 billion was made. $124 billion in revenue, 38 EPS. Standard case, 20 million cars were sold with a $30,000 average price. Total revenue, $700 billion. Net income, $145 billion. EPS, 46. Energy revenue expanding at a compound rate of 30% yearly, reaching $47 billion. Service revenue predicted at $77 billion. Example of bull, 23 million cars are sold a year, with a $28,000 average selling price. Revenue from energy increased by 35% year over year to $62 billion. Revenue from services increased to over $88 billion. Total revenue, $800 billion. EPS, 48, $150 billion in net income. Asterisk asterisk ultra bull case. Asterisk asterisk 25 million cars were sold with a $26,000 average price. Services generating over $100 billion in revenue. Total revenue, $800 billion. Net income, $176 billion. EPS, 51. Energy revenue soaring to $80 billion, growing at an amazing 40% annually. These projections, which are just that, predictions, set the stage for possible stock prices in 2030, spanning from extremely negative ultra-bear scenarios to extremely positive ultra-bull scenarios. The ultra-bull scenario is predicated on a P/E ratio of 15, whereas the ultra-bear situation assumes a P/E ratio of 25. These are the numbers. Asterisk asterisk high-tech bear case. Asterisk asterisk. Share price, $718. Market capitalization, $2.3 trillion. Asterisk asterisk standard case. Asterisk asterisk. Share price, $1,100. Market capitalization, $3.6 trillion. Asterisk asterisk example of bull. Asterisk asterisk. Share price of the stock, $1,200. Market capitalization, $3.9 trillion. Asterisk asterisk high risk situation. Asterisk asterisk. Share price, $1,300. Market capitalization, $4.2 trillion. Let's now turn our attention to the quantity of Tesla shares needed to become financially independent by 2030. This is the fun part, where we figure out how many shares we'll need at different stock levels in order to hit the $1 million milestone. Asterisk asterisk ultra bear case. Asterisk asterisk about 1,393 shares or $210,000 market value. Asterisk asterisk bear case. Asterisk asterisk 1,048 shares or $157,000 in cash. Asterisk asterisk base case. Asterisk asterisk 892 shares or $133,000 in cash. Asterisk asterisk bull case. Asterisk asterisk 774 shares or $116,000 in cash. Asterisk asterisk ultra bull case. Asterisk asterisk $726 shares or around $108,900 in cash. Every situation has prerequisites and possible results. With the stock price at a high value, the hyper bear case may seem overwhelming, but if you're dedicated and disciplined, you can succeed. The base case is a more realistic option that calls for a significant but reachable cash value and share count. Nevertheless, if you're committed and have faith in Tesla's future growth, you can achieve your financial objectives. Let's now focus on the bull scenario, which indicates a much higher stock price forecast. The possible benefits would be great if this scenario came to pass. It's still a six-figure investment, but it's an improvement over the earlier situations. Here, dedication and self-control are still essential to success. In the extreme bull scenario, the stock price rises to even greater levels. This scenario provides a potential 9-fold return on investment by 2030, despite the associated financial commitment. Though it's not quite cheap, it's a more practical choice than in the other situations. It's crucial to remember that not everyone can afford to invest a sizable amount of money, like $116,000 all at once. This is the point at which dollar cost averaging is essential. Smaller, more regular investments over time will help you reduce the dangers brought on by market swings. Many investors view Tesla stock as the best chance of our lifetime since it offers such a wonderful potential. The six-figure investment required may deter some people given the financial needs. To find out how much you would require at different price points, let's experiment with the present stock price. The required initial investment is much decreased when the stock price declines. To see the possibilities, it's worthwhile to investigate several scenarios. In conclusion, it is totally feasible to retire comfortably on Tesla shares by 2030. This is not the opinion of a single person. Even long-term investors recognize Tesla's bright future, even the ones who have become pessimistic. The market will turn in Tesla's favor once full self-driving is settled. Recall that they have faced similar questions in the past and disproved the naysayers. FSD will revolutionize the market by continuing on the same path. This concludes the video. Click like if you found it entertaining. For more fascinating material, make sure to subscribe to Tesla Stock News. Together, let's continue on this trip. I'm grateful.